Hello everyone, welcome to Diplomatic Briefing. According to a Bloomberg report on May 26, even after the easing of trade tensions between China and the US, many Chinese plastic factories are still reluctant to resume importing American propane and have already shifted to sourcing from Canada and the Middle East. The report points out that this highlights the difficulty in restoring previous business ties between the world's two largest economies. Some analysts have pointed out that, given the current tariffs, the profit from using American propane isn't very attractive. Unless there are price fluctuations, there won't be a large amount of propane shipped from the US to China. Propane is a type of liquefied petroleum gas, also known as LPG, which can be used for heating and for producing plastic products. According to available data, before the Trump administration took office in 2024, nearly 60% of China's liquefied petroleum gas imports came from the United States. According to data from the U.S. Energy Information Administration, China is the second largest buyer of U.S. LPG after Japan. Data from China's General Administration of Customs shows that in 2024, China imported 35.68 million tons of LPG, with 18 million tons coming from the U.S., accounting for more than half. U.S. traders told Bloomberg that after the U.S.-China tariff truce, both buyers and sellers got a breather, but buyers are still cautious about resuming purchases of U.S. propane, worried that Trump's tariff policies might change at any moment. Traders also said that up until last week, China's propane dehydrogenation units, or PDH for short, were still importing goods from Canada and the Arabian Gulf. According to the introduction, this facility is used to convert propane into basic raw materials for plastics. They also revealed that as more and more Chinese buyers are satisfied with alternative suppliers, the global propane trading price premium over the benchmark price is narrowing. The report says this may indicate that sellers outside the U.S. are willing to compete for Chinese business in the long run. China is the world's largest producer of plastics and a supplier to major consumer markets such as Europe and the US. Traders say that Chinese buyers are still actively purchasing liquefied petroleum gas from the Arabian Gulf. Hartke, head of America's market analysis at a cargo tracking and analytics company, said that given the current tariffs, the profit from using US propane is not substantial. He said that unless the price of U.S. propane drops or the prices from alternative suppliers go up, there won't be a large amount of propane shipped from the U.S. to China. As early as April, U.S. media had already noticed changes in propane trade between China and the U.S. At that time, Bloomberg reported that high tariffs were causing Chinese buyers to replace U.S. products with LPG from the Middle East, and the impact on global trade was starting to show. According to reports, as many as 7 ships carrying U.S. LPG were originally scheduled to arrive in China in May and June, but later changed course to India and Southeast Asia. In exchange, the Middle Eastern LPG that was supposed to be sold to those buyers will now be supplied to China. Shipping consultancy Drury analyzed that China's countermeasures will create problems for U.S. exports. The U.S. terminal expansion plans may face delays and inventory buildup, which will drive up costs and make it hard to find buyers for LPG, forcing producers to sell at low prices or cut production. This situation will cause U.S. LPG producers to suffer ongoing losses. In fact, Trump's tariff policy doesn't just affect LPG, but the entire U.S. energy export industry. The impact of high U.S. tariffs on the oil industry is also starting to show. Last May, the Trans Mountain Pipeline Expansion (PMX) project in Canada began operations, transporting oil from Alberta to ports on the Pacific coast of British Columbia, and it has now been in operation for a year. On May 16, Reuters cited data showing that, due to the global trade war triggered by Trump, China has become the largest customer for Canadian oil transported through this pipeline. According to data from ship tracking agencies, since the expanded TMX pipeline has been fully operational, Canada has exported an average of about 207,000 barrels of crude oil to China per day. In contrast, over the past decade up to 2023, Canada's average daily oil exports to China were only 7,000 barrels. Reuters reported that China has become the biggest buyer of oil from the TMX pipeline, breaking the initial expectations of some people who thought this oil would be shipped to the U.S. West Coast and that the U.S. would be the largest buyer, since Asia can get more affordable Russian oil. Skip York, chief energy strategist at U.S.-based Turner, Mason and Company, said that given China's growing desire to secure new and stable sources of crude oil, most of the additional capacity from the TMX pipeline is likely to be shipped to Asia rather than the U.S. West Coast. He pointed out that everyone can see that almost all the new oil tankers are heading west, exporting to China. Due to the impact of the tariff war, it's becoming clear that U.S. energy companies may lose the Chinese market. In fact, when it comes to bulk commodity purchases from the U.S., China has always had a macro-level demand, hoping to diversify its sources and also not wanting to let relations with the U.S. deteriorate too much, tightening up only when necessary. When there is a real need, and if the prices of U.S. products are reasonable, China would still buy some American goods, like soybeans or Boeing airplanes. China doesn't want the U.S. to think the trade deficit is too big and use that as an excuse to start a trade war. But after the tariff war in April and May, the U.S. has already made it clear that it wants to enter a hostile stance with China. Even if things have eased for now, China still needs to be fully prepared and will definitely reduce its reliance on U.S. supplies. With Trump making spontaneous remarks and flipping his stance on certain policies, people outside the U.S. think trusting him even halfway could be disastrous, so they will definitely diversify their investments. Trump wants to push for manufacturing to return to the U.S., but recently he also said that the U.S. doesn't plan to produce sneakers or t-shirts. This statement seems to have given some relief to apparel manufacturers in Vietnam and China, and it's especially a good sign for Vietnam's huge textile industry. However, some companies no longer trust what Trump says. According to a report by the South China Morning Post, data shows that last year, about 17% of China's textiles and apparel were exported to the U.S., while Vietnam's share was much higher, reaching 38%. As the two major apparel export hubs in the world, companies in China and Vietnam are still facing huge uncertainties. During the 90-day tariff truce, the recent remarks by Trump and his U.S. officials seem to be good news for apparel exporters in both countries. On the 25th, Trump said, "We don't plan to make sneakers and t-shirts, because we can make those very well elsewhere. What we want to produce are chips, computers, and many other things, as well as tanks and ships." The American Apparel and Footwear Association responded by saying that tariffs are detrimental to their industry. Their association president, Steve Lamar, stated in a statement that 97% of their apparel and footwear products rely on imports, and these products are already among the most heavily taxed industries in the U.S. Higher tariffs will only increase input costs for American manufacturers and drive up product prices, which in turn harms the interests of low-income consumers. U.S. Treasury Secretary Bessent had previously made remarks similar to Trump's. On April 29, Bessent said that what the U.S. needs is advanced manufacturing and that the textile industry is a thing of the past. As soon as he made this comment, it sparked controversy, with many believing that he was looking down on the textile industry. The National Council of Textile Organizations in the U.S. emphasized that the American textile industry produces over 8,000 different products for the military and employed more than 470,000 workers last year. Martin, a consultant from an Asian consulting firm, said that Trump's remarks suggest that, as industrial policy becomes increasingly pragmatic, the Trump administration seems to have accepted the reality that not every factory needs to fly the American flag. Vietnamese textile exporters can now breathe a little easier. However, Martin immediately added that Vietnam's garment industry, worth a total of $44 billion, has already had to endure significant upheaval. Local businesses are well aware that Trump's trade policies often prioritize political image over policy consistency. He said that unless these reassuring statements are backed by concrete policy support, these garment manufacturers are more likely to revise their risk assessments or contingency plans. According to a report by the South China Morning Post, the future direction of U.S. tariff policy remains uncertain. Trump has threatened other countries that if they do not reach an agreement with the U.S. during the suspension period, tariffs will soar back to their original levels. Ms. Zhou, who runs a bedding and curtain factory in Zhejiang, said that Trump's remarks did not make her feel reassured, but rather quite uneasy. She said that U.S. policies change every day, and for people doing business, this is the worst kind of uncertainty. She said that today they might say there's no need for the textile industry to move back, but what if they change their minds tomorrow? What are we supposed to do then? Right now, in our industry, no one dares to bet on the U.S. market anymore. Ms. Zhou has been supplying products to American clients since 2014, but over the years, she has been steadily reducing her investment in the U.S. market. She said that Trump's recent tariff hikes have sped up this process. Currently, the U.S. market accounts for less than a quarter of her sales. Winnie Lam, Secretary General of the Board of the Vietnam-Hong Kong Business Association, said that many Chinese, Hong Kong, and mainland investors in Vietnam are also taking a similar approach, exploring markets outside the U.S. He said that Trump's remarks would only bring temporary relief to Vietnamese exporters. Many companies are taking concrete steps to diversify and are increasingly reducing their reliance on the U.S. market. Winnie Lam believes that the world is theirs, and now they must bravely take the step to enter other markets, markets that were already on their radar, but are now expanding at a faster pace. He said that the textile industry is showing through its actions that the U.S. has no way to make them go back. In conclusion, since Trump took office for 100 days, the ever-changing tariff policies and huge uncertainty have seriously affected the global market. The manufacturing industry does not intend to change their plans based on Trump's remarks, because for them, the top priority is to reduce risks to their company's future. Focusing on expanding markets outside the U.S. is a rational and pragmatic decision. When companies in most countries are reducing their reliance on the U.S. market in their business portfolios, it actually weakens the U.S.'s bargaining power with the global economy.